ladies and gentlemen. It's Modern Investing on Pod TV. My name is Sasha Star, and today's guest will have Dr. Milan Sambarak. Welcome to the show, Milan.
Delighted to be here. Thank you for inviting me.
Great to have you as always. And Jim Eid from Eid Foundation. Welcome to the show, Jim.
Thank you, Sasha. Great to be here.
Yeah, thank you so much. And today is Wednesday. Market is up,
All
except Nvidia. Nvidia is down second day in a row, big time, and it has to go down in order to get into trading range. There is for a long time, there was no trading range for Nvidia. It was going almost vertical line up. Now it's coming down. It has to find its floor. I would estimate that the floor would be 850. And resistance 950, and that's exactly what's happening. So the stock is now trading slightly over 900, although I don't exclude possibility of going it down to maybe not 850, 875 or something there. You see, if you look at the formation of last couple of weeks, it has formed a down trade and an up trade, like a cup formation, and then it's now making a handle. Once a handle will be completed, then I expect it to go to well above $1,000, and that should not happen too long from now. We have earnings report coming in May, around May 20th or so. So I think before that there will be kind of a trading range, although I don't exclude that we are not going to wait for the report, because if stock will go to $1,000 before report, then on positive report it can go to 1,200 easily. But listen, we have to be realistic about something. Nvidia, it's a real business, it's a real stock. It's not DJT, the Donald Trump stock. There are no earnings. Actually, no, it made some money. It made something like $700,000. I don't remember exact number, but it lost at the same time $49 million. So that's a different story. However, I must tell you, right now, it's a moment, you have to remember it for a long time, when a real stock as NVIDIA is going down for second consecutive days, and the DJT is going up, almost vertical line. Why? Because the stock is restricted, so insiders cannot sell for a matter of 6 months.
Right.
And if you take a stock, it doesn't matter what it could be, a GameStop, it could be DJT. If there are buyers and no sellers whatsoever, you cannot even short the stock because you have to borrow the stock, and no broker will allow you to do that. So you cannot short the stock, you cannot sell the stock because you don't have stock to sell. Nobody has. Those people who have stock to sell, they're restricted for 6 months. So if there are net buyers and no sellers, physically there are no sellers. No one can. The only way you can sell stock if you will buy in the morning and sell in the afternoon. Okay, that's the only way how you can sell stock. Otherwise, there is no way for anybody to sell stock. So that stock must go up. There's no, it's a law of physics. There's net buyers and no sellers whatsoever.
So are you predicting that 6 months from now there's going to be a lot of selling?
Do I predict that? Anybody in his right mind, all those insiders, once the restriction will be done, what else they can do? But realistically speaking, I don't think that it will go higher and higher each day in 6 months, because if that will happen, which is quite possible, the stock can go up to, I don't know, $5,000 a share, for example. And that will make Trump already, actually, he joined back Forbes 500. But if stock will go to 5,000, I figured out that Trump will become the richest man in the world easily, with virtue of, say, $5,000 per share, and he has so many millions of shares. So obviously he will become the richest men in the world. Goodbye, Bezos and Elon Musk and
As
all
we
that.
know, it's paper money. It's just
It is, yeah. That's right.
Well,
Well, that's the story about Jim. Are you trading DJT at all?
I no, I'm never touching that. But I am happy. My screen is all green today,
Good.
and it's Wednesday, so I kind of expect a good day. But the market has been up and down. There's been some volatility. People are paying attention not only to corporate earnings, which they should pay attention to, but to interest rates. And the Fed has been reluctant to reduce them. But they're promising maybe 2-3 rate cuts at this time, sometime this year, and I think the market likes that. But they haven't yet pulled the trigger. I'm not sure exactly what they're waiting for, because the problem that they have is that they're tied to an old way of thinking that the economy is overheated, which it isn't. The economy is very strong. It's doing extremely well. Record earnings are being reported. The stock market, I think in the first quarter it went up about 10% or something like that. It was, it's a fabulous time to be in the market, to be investing. But there is some volatility that's being introduced to it, which sometimes makes me a little bit uncomfortable. But when I look at the steady trend upwards, I'm just sitting tight and holding, and seeing a lot of green, which makes me happy.
Nice, very nice. Milan, how is your trading doing these days?
Well, we have an inverted yield curve right now. And an inverted yield curve has predicted every recession in the last 50 years or more. Every recession has been predicted by an inverted yield curve, which we have right now. Now, not all experts agree on the validity of the inverted yield curve today, although up to very recently they all did. So right now there are some who don't agree with it. But now, since we have an inverted yield curve, the prospects for the market dropping are serious. And what you said, Jim, volatility, we have volatility today. Volatility is the only one of the few certainties that we have in the market. The volatility will always be there. Other certainty would be dollar cost averaging the entire market, not individual stocks. But yeah, we have an inverted yield curve today. So what I've done is I've been in 50% in the market and 50% in cash or near cash. And I've increased that percentage. I was able to sell some SPY at a profit because the only stock I own in my core portfolio is SPY, which represents the American economy as a whole, which has a track record of being the best place to invest for over 100 years, unless you cherry pick. So I've done what I think makes a lot of sense, and I'm more than 50% now in cash, having sold some SPY at a profit, and I'm waiting for the market to tank to get back in. The difficulty with this approach is I don't know when to get back in. That's the issue over there. But, last week, I recommended the Germany's Rheinmetall and Sweden's SAB for people's core portfolios. Fund portfolios. There are three things I like to say about fund portfolios. Number one is nobody needs one. Number two is the percentage of your investments in a fund portfolio should be small enough of an overall percentage of your investment so that if you lose it all, it won't change your lifestyle. And number three is don't keep records because you're almost sure to be disappointed compared to SPY as a whole. So those are the three issues about having a fund portfolio. And number one is nobody needs one. So I don't have one. But I did recommend this Germany's Rheinmetall and SAB because they both are military companies which depend heavily on situations like the one that we have in Ukraine right now. Who do you sell your weapons to in times of peace? I mentioned previously that Canada is one of the world's biggest bullet producers. Who do you sell your bullets to in times of peace? War is very profitable unless it's fought on your own land, your own territory. So that's where I am. I don't have a fund portfolio. I only have a core portfolio, and I have in it nothing but SPY. That is the American economy as a whole, and that has done very well for me over the many years. And based on history, it will continue to do well for investors who invest in that way. So that's my position. So the fund portfolio can be a lot of fun. Just make sure that you're interested in the subject, that you don't keep records because you're sure to be disappointed, and make sure that it's small enough that if you lose it all, you won't be reduced to eating cat food.
Yeah, it's very good observation. Actually, I took liberty to keep track record.
Mhm.
And what my track record shows is that in the last 14 months, I've generated profit of about 190%. And with that, I think if I wouldn't have fund portfolio, I would deeply regret that. I would have no portfolio, no fund portfolio, no records, and no money as well.
You know what, Sasha? You're talking about yourself. You're a market wizard.
Only.
And most people are not. Most people cannot duplicate what you have just done. And Warren Buffett, for example, has one of the best track record as an investor ever, having beaten the S&P 500 for over 50 years in a row. And he himself now is decided that he is going to leave the money that he's leaving to his widow to be invested in SPY the way that we recommend, instead of individual stocks. And actually, Buffett and Munger never invested in individual stocks. What they did was they bought entire companies, and many of those companies are traded on the stock exchange, so it looks like they are picking stocks. They never recommended a stock. They don't pick stocks. They buy whole companies, which happen to be in the stock market, so it looks like they're stock pickers. So,
if they would bought whole companies, then that company would become private and it wouldn't trade on the market anymore. So when he's buying, for example, Apple, substantial amount of shares, he's not buying whole Apple company.
You're buying a lot of Apple. That's true. Yeah.
A lot of Apple. Did he make any money on Apple though?
Probably.
Well, Apple's gone up fairly well. And also, like I said before, and it's important to recognize, Sasha, there are not very many Mozarts out there. Mozarts in investing. Sasha Starr happens to be a Mozart in investing. You happen to be a market wizard. Most people are not. You cannot.
Mozart is not the right comparison, because you remember.
I'm a Solari then.
You've ever seen on YouTube a very interesting lecture by Glenn Gould, the late Canadian pianist, where he explains why Mozart was at the best an average composer and not very esteemed. First, what he's done, he exclude his masterpieces like symphonies, number 40, 41. He exclude Requiem. He exclude a few piano concertos and so on. And then he showed that Mozart, because he always needed money, and he had to compose a lot of mediocre music.
Oh,
just
sure. That's yeah.
And the large body of his music is very uncreative, repetitive, and predictable, and so on, excluding his masterpiece.
Well, you can recognize it. You can always recognize Mozart because it's, like you say, predictable and repetitive.
So
he made a lot of money. He made a lot of money. Mozart did not die poor, as we are led to believe commonly. He made a lot of money, but he spent even more than he made. He was a gambler.
But wait a second, he died very poor. He was dying destitute, and he was. I mean, his widow. She couldn't pay even for his funeral or medical.
He may not have been the most disciplined.
That's it, because he spent more than he made. He made a lot of money, but he spent more than he made. Somebody figured out there is actually a music critic whose name is Einstein, and not Albert Einstein, but a music critic by the name of Einstein. And he figured out that if a musician today sat down and copied all of Mozart's music, he would need 72 years to do it. And Mozart didn't live that long. He died in his early 30s. And the reason why Mozart
is prolific. And as Sasha said, a lot of it was just churned out to make money. And, that's one of the things about we can say this in sports figures and musicians, entertainers in general. Many of them make a lot of money and then spend it all
True.
and live lives of
But
destitution.
if you
Well,
will,
one entertainer actually did very, very well, and his name is Donald Trump.
Yes.
He's the only way he could make any money. It was his show Apprentice. Actually, first two seasons were very successful, and then it was nothing. But he had a lot of other ventures where he didn't make any money and actually lost a lot of money.
Yeah,
Just
6 bankruptcies and counting.
anything, and
Yeah.
all his latest con. Oh, by the way, it's not the first public company, DJT. I remember his company that owned casinos in Atlantic
Yeah.
City. That was a public company, and the end of this company. Same way as all his ventures, like Trump Airline, Trump University.
Universities, Trump's vodka, Trump's steak,
Yeah. Oh, now you know that Trump is selling Bible.
Bibles.
$59 a piece. You can buy Trump's Bible.
But I would like to pay attention a little bit to just the overall stock market, because I remember when Trump predicted in 2020 if he didn't win, the stock market would crash.
Yeah.
Well, the S&P 500 is over 5,000. I remember back in the 90s when I thought that if the NASDAQ crossed 5,000, I would be very comfortable, and my monetary financial worries would ease. The NASDAQ is now over 16,000. The Dow is approaching 40,000. These are record numbers, and companies are still reporting record earnings. So, there's been talk of recession for 4 years now. I still don't see signs of it. The inverted yield curve, being what it is, gives you pause. But the underlying economic factors that I see have not been changed. What we had was a global pandemic that broke our distribution system, and it caused a massive amount of inflation all over the world, not just in the United States. But the United States has recovered better than any other country. And we need to pay attention to that. Investing in the United States market still makes a lot of sense to me. I see all green. I don't see any reason to think that this is going to suddenly come to a halt. What is the reason that it would come to a halt?
I totally agree with what you say, James, but how do we explain the fact that this is happening and the U.S. market is at an all-time high and tending to go higher, given the debt that the United States carries today? How do we explain that?
But what the debt of the United States has little to do with the stock market. Stock market. Let's see, if you take a company like Google, Nvidia, Microsoft, okay, they have so much earnings, and they're growing, and how the U.S. debt affects earnings of these companies. I really don't see any correlation here at all. I mean, maybe I'm not a great economist, and somebody else maybe will explain it to me one day. But so far, I'm getting lost at that.
Well, the reason it would be a factor at all would be if a government stopped spending, and that would have an impact on the overall economy. There's no signs that the government is going to stop spending.
Actually, spending more and more.
And in things that are important to the national defense, for example, the CHIPS Act, the infrastructure that is undertaking that under the Biden administration, that Trump promised every week he would talk about infrastructure. He never did anything about it. Biden has done things about it. This infrastructure is very important. We have. I'm so sorry for the devastating occurrence in Baltimore. But that was an accident, but we do have bridges failing all over the country, and we need to take action, and we need to build our infrastructure. So there's no sign to me that there would be this intense stoppage of spending by the government. So I don't, again, see any underlying factor to think that things are going to change in the immediate horizon. Of course, we're going to say things will never go straight up. forever.
Of course.
But there is another
It
factor.
will correct at some point in time, but I
Yeah.
see no sign of it correcting. I see no reason to think that it will.
There is another factor which I mentioned in a couple of our programs, is that a lot of people in US have money funds.
Yes.
And there
Very
are
important.
$6 trillion earning 5% about that much. And what will happen if interest rate will go down as a result of the easing of the Fed, for example? Would this now, the $6 trillion will earn not 5%, but only 4%? What about 3%?
3%
So
is very
they
much.
will start moving because there are plenty of stocks. Some of them I keep in my core portfolio, which are earning 8-9% interest, right? So
Yes,
this
dividends and-
company will actually, I suspect that these companies will appreciate in price, because if the interest rates will go down to 2-3% and the company earning 8-9% dividends, so obviously money will flow into these companies. They will, as a result, they will no longer pay 8-9%, because when the stock will start climbing higher, so it will reduce to 7%, maybe even 6%. But still, if average interest rates will be
Yeah,
2-3%,
let me say a couple of things about that, Sasha. For instance, if right now money is making 5%, and advisors suggest that we live on 4% of our portfolios, why bother taking the risk associated with stock market investing instead of simply buying and holding this 5% guaranteed return? So that's number one. And number two, talking about dividends, you know, the group of stocks which are called dividend aristocrats,
Yes.
they're the stocks that have been paying an increasing dividend every year for more than 20 years. And there is a very small number of those, but their portfolios entirely made up of dividend aristocrats, and they have not done as well as simply holding the United States S&P 500, which represents the American economy as a whole. Dividend aristocrats have not done as well.
well, you touched two different subjects. One, you're talking about the fact that the interest rates will, in case if they're going lower, then your 5% will be decreasing to 4%. And
That's true. That's true.
So right now it's 5%, enjoy. But in case it's going down to 4-3%, you do have to make some adjustments. Otherwise, you will be able to withdraw 4% as your advisors tell you. I don't listen to those advisors, so let them tell anything what they want. It doesn't affect what I'm doing at all, period. And I don't withdraw money from my fund portfolio as well as my core portfolio. So I don't care if I want to withdraw, I can withdraw 10% or 20% if I want to. But I haven't withdrawn any money. Jim, how about you? What's your view on this interest rates?
Oh, I think interest rates will come down. I think it's just a matter of time. And I do think that the Fed should have already acted on that, but I've been preaching that for a while. The other thing that's going on that I've been paying attention to is that money is going out of mutual funds and it's going into ETFs. And what is the overall effect? And Sasha, I'd like your opinion on this. Do you think that that means that's more money in the stocks and more money into the market, or is it kind of a wash? I think that it's an interesting trend to observe, and I think it leads people to mutual funds, which were another way of being safe. You know, it allowed you to diversify into a lot of different stocks without picking any particular stock. But now the move to ETFs is more active trading, as far as I'm concerned.
Absolutely.
Do you agree with that?
I agree, because ETFs, it's a very easy way to get in and out of any sectors of the stock market. And they're much more transparent than mutual funds, because in mutual funds there is a lot of smoke and mirrors. So people believe that
everybody knows about mutual funds because they're so aggressively sold by Wall Street, because Wall Street makes so much money selling mutual funds.
Yes.
They don't make that kind of money selling exchange traded funds which track the S&P 500. And interestingly, Bloomberg, a former mayor of New York, has stated that if Donald Trump had just taken his inheritance and bought SPY or his equivalent predecessor, he would have done a lot better than he has done doing what he has been doing.
Yeah, that's true.
That's
That's true.
obviously true. Yeah.
Yeah. You see, with ETFs, they're very transparent. They tell you exactly their expenses.
Yeah.
And for example, I bought a couple of ETFs, which are basically what they're doing. They're selling covered calls on. I have three of those: one on Nvidia, one on Coinbase, and one on Tesla.
Yeah.
And they're paying considerable dividends monthly, and their expense rate is 0.99, so it's almost 1%. But considering what they're paying, it's 1% is really nothing. You can just really ignore it. And these ETFs are doing very, very well. Of course, they're not for average investor because it's very difficult to. Most people don't know even what is covered call.
Yeah, that's
So,
right.
so how can you buy something what consists of a strategy of selling covered calls if you don't understand what it is? And I discovered that by pure chance. I typed Nvidia, and at the end I typed Y instead of A.
Uh-huh.
And all of a sudden I discovered, oh, wait a sec.
Yeah.
It's selling covered calls on Nvidia. They should do quite well. And I purchased a couple of thousand units. And then I added Coinbase and Tesla. Coinbase is doing extremely well. You know why? And Tesla is doing not so well. And you also know why. Although probably it will recover, but it's still paying very considerable dividends. Although it's down from my purchase moment, it went down.
History shows that the best way to make money, bar none, is to sell covered calls on the U.S. market as a whole and keep on doing that and keep the premium income that happens until you're assigned. When you're assigned,
premium.
Premium.
no,
There's no premium. You have to suffer.
if you sell covered calls on a Monday, expiry date on a Friday of the same week, you get the best returns, and you keep on doing that until you're assigned. Now you're in cash. When you're in cash, that puts you in a position to sell cash covered puts, and you keep selling cash covered puts and keeping that premium income, and you sell them on a Monday, expiry date Friday of the same week, and you keep doing that until you're assigned. When you're assigned, you own the stock again, which allows you to sell covered calls on it. And keep doing that, and that generates a 16% return, or has done so over the more than 100 years.
I know this guy who wrote this book.
Yeah, but you're talking about.
I recommend it.
Yes, you're talking about 16% a year. Yeah, it's annual 16%. Just for comparison, do you know what premiums are paying Nvidia for both puts and calls? You know what?
Well, I don't pay attention to individual stocks. I recommend against buying individual stocks. Yes, sometimes, there are very few ways to beat the market. One of them is to sell cash covered puts and sell the market as a whole. Only sell, never buy. But the individual stocks, I recommend against that because they work, but not all the time. We're wrong often enough. There's rules-based investing and judgment-based investing, and rules-based investing always works 100% of the time. Judgment-based investing is wrong much of the time, although we do have to have it. We have to have some judgment. You want to keep that to a minimum.
Well, Sasha and I were touting NVIDIA for a long time, well before it became so incredibly popular. And Sasha has made much more money on it because I sold. It's not quite selling at twice what I sold it, but it's approaching that. Once it gets to 960, it'll be twice what I sold it. And so I I think that it was my discipline that made me sell it. And
Yeah, right.
I don't regret it because this discipline has paid off for me over the long run. You know, it's the same with like Taiwan Semiconductor is another thing that I kept saying, and I ended up selling, and it's still going up. And these are the kinds of mistakes I can live with because I made my target.
James, that's hardly a mistake. I mentioned previously that one of the Rothschilds said, I made my money by selling too soon.
Yes.
I would like to mention, we digress from what I said earlier. I'm not talking about stock, individual stocks. Okay, look, let's assume, Milan, that you're right and you should not buy individual stocks. Okay, I can live with that. But I'm talking about selling options, like
Yeah,
puts
right.
and calls on NVIDIA.
Right.
And
Only
we
sell to the
are
market. Yeah.
and we are in different ball game comparing to your 16% annual return on S&P options. Here is what I've gathered by selling, let's see, covered calls. It's easier to understand. I sold, I still keep this position, although I'm already making quite a bit of money, but I'm still selling, still keep that because on NVIDIA, I sold December 20, 960 call, which is still out of the money. I've generated $190 for each call. We are talking about $19,000 for one call. So for 2 calls, it's $38,000. For 4 calls, $76,000. That's
Sasha,
enough money
Sasha,
to collect.
for you to
Yes.
do that, Sasha, for you to do that, you have to pick an individual stock. And picking the correct stock, people like me can only do it with hindsight. We're not market wizards. We are not Mozarts. And so we can only do it with hindsight, and we're wrong much of the time. So you did that correctly by picking the correct stock, but most people are not able to do that. And so you cannot make recommendations on this show that will apply to market wizards only.
Well, the other thing that we can take into account is like sectors, and for example, one of the things that NVIDIA was poised to profit from was the focus on artificial intelligence and AI. And many of the stocks that I picked, individual stocks that I picked, were poised to take advantage of that. And we're going back over a year, 2 years earlier, when we were noticing that the AI was becoming the most important thing in investment. And so by paying attention to the world around you and seeing what's going on can guide you, can give you, based on your experience and wisdom, you can guide yourself to a narrow range of stocks. And then your skill comes in where you pick the ones that are going to be successful in that. For example, I poo-pooed Intel and I said NVIDIA and Taiwan Semiconductor Manufacturing. And those are the stocks that I focused on. And I even have bought a very tiny share of Intel lately because Intel seems to have done a turnaround and embraced and put all of its effort into AI as well. So Intel has actually started to do better than I had. I had thought it was the dusty old relic of the past, but it's actually doing okay now because of it's changed its focus. And so when you pay attention to what's going on in the world, you can do better than the average investor who's not paying attention. So
agree. I would like to, before we finish the program, I would like to mention yet another options on NVIDIA that I sold, cash covered puts. I sold 3 of those. I'm talking about specifically December 920 puts. Each one generated for me $13,760. So overall, it's about $52,000. So 52 plus 70 that I mentioned on calls, it's $120,000. This definitely beats 16% annual.
But explain to me the risk that you're taking, Sasha. What
okay, here is the risk.
Wrong?
Okay, it's easy. Okay, here is the risk. Let's start with puts that I just mentioned. So each put that I sold allows somebody to sell me NVIDIA stock
Yeah.
for $920 all the way to December 20th. Okay. So if I will buy $920 stock NVIDIA, which I don't mind to have at all, but however, I've collected 13,000, almost $14,000. So if we are subtracting from 920, 140, so essentially my price is $780. How bad is to own NVIDIA for $780? You tell me.
Right.
When you buy your NVIDIA, Sasha, who are you buying it from, and why is that individual selling? Why is that individual not selling something else?
Okay, number one, we are talking about options, which also I'm buying or selling to somebody. I don't care. Let's see if I'm selling puts and calls. So there is a buyer on the other end. Now, with this not very liquid options on both of December 20th, it must be a professional. It must be a market maker on options for NVIDIA. So I sold him this puts and calls. He bought from me puts and calls. Do I care what's his name and where he's working and how many children he has and how much furniture he has to sell and so on? I really don't.
Yeah.
That's the last thing what I'm thinking about. And I think the most likely scenario that both these options will expire worthless by December, because now the puts, I don't care. They will expire worthless. I'd say 95, 99%. Now the calls, I have shares of NVIDIA.
You have to have the shares for self-covered calls. I was going to ask you, you have to own the security in order to sell covered calls on it.
Absolutely.
Who are you buying that from? And why is that individual selling NVIDIA instead of selling some other security?
You know, there are stocks, there are very illiquid stocks, and you can, if you want to buy or sell, it's almost you have to do it by appointment. So in this case, you would probably know the name of the seller of the security. NVIDIA, which is trading, say, 65 million shares a day, how and why would they care from whom I bought or to whom I will sell? And I want to tell for the record, I will tell you that about 3 weeks ago, I sold in one transaction 1,000 shares of NVIDIA. I'm not saying that I owned 1,000 shares of NVIDIA. No, at that time I owned only 700 shares of NVIDIA, but 300 I was trading in a...
Are you selling short?
No. There were trades that I was buying NVIDIA and selling NVIDIA, just a short, say, 1-2 days trades. And a day when I decided to decrease my position, at that time I had 700 that I held and 300 that I was in and out. And at that time I was long 300. So 300 plus 700 makes 1,000. So in one transaction, which took me less than a second, I sold 1,000 shares of NVIDIA. And of course, there was no short sell because at that particular moment, I owned 1,000 shares of NVIDIA. Okay, so now I have some ammunition to buy more NVIDIA. Let's see if it will go, as I say, to 850. I will definitely buy 300-400 shares, but we'll see if it will get there. We'll see. Okay, there are a lot of interesting things, and you don't have to care so much about NVIDIA. There is a Facebook. There are a lot of interesting things going on in the market, and there is a place for everyone to be a little bit on the venture side and buy if you want. And if you don't want, just keep buying S&P 500 or sell S&P 500 and just enjoy and make money. That's all I can say. Yeah. So I would like to thank you very much for today's program, and good luck in your trading, and see you next week, same place, same time.
Thank you.
Bye-bye.
Thanks again, Sasha.
Cheers.
Bye, Milan.